This is not financial advice. I'm recording my thoughts about options and specifically selling calls. Before I continue with the details, I would like to clarify two things. Number one is options trading is a zero-sum game, so I would never do options trading. And number two is it is very dangerous to do options on margin, so I would never do options on margin. So now selling a call. Sell means that I'm selling something and I get to collect a premium. And call means that I'm betting on a price that's higher than the current stock price. The buyer gets the right to buy 100 shares of a particular stock at a particular strike price from me. So I have to own or buy 100 shares of a particular stock right now to actually do this selling call option. So first I pick a stock that I really want to own right now, and that is stoneco. The current stock price is about $9.13, and personally I think this is a good price to get into this stock. For selling a call, I have to first look at my options. When I select sell call with an expiration date of January 2024, that is 11 months from now, I see $2.05 for a $10 strike price. So if I sell this call right now, I would get $205 in my account immediately. As you can notice, the stock price is currently at about $9.13 at the time of this recording. So now let's look at the options that I have. I really want to own this stock, right? What I can do is just buy 100 shares of this stock at $9.13, which would cost me about $913, and forget about these options, right? So that is one option which would cost me $913. Now look at the purple box on my screen, and that is buying 100 shares of stoneco with a sell call. So as you can see, the cost for 100 shares is about $913, and the gain from options, since I sold the call, I would gain $205. So I paid $913 to buy 100 shares, and by selling a call I got $205 into my account. So in a way I only paid $708. So when I divide that with 100, the actual price paid per share is $7.08 US right now. So now let's assume that the stock price would never get to $10 in the next 11 months. Then what happens is that this stock option would never get exercised. So my actual price paid per share would stay at about $7.08, which is a good thing, right? So that's about 22% gain. Instead of paying $913 US to own 100 shares, I only paid $708 because I sold a call. Now let's look at the other option where the stock price reaches $10 or above, and then the stock option gets exercised. So in that case, the buyer gets the right to buy 100 shares at $10 a piece. So the buyer has to buy those 100 stocks for about $1,000. But remember, I already collected $205 before, right? So that's about $1,205 into my account. And what I have paid to get these 100 shares is about $913, right? So net gain would be $292. That is 32% gain on my initial investment of $913 in 11 months. So in both of these cases, when the option gets exercised and the option doesn't get exercised, my gains are 22% and 32% respectively. These are incredible gains to have in a period of 11 months. So personally, I'm not too greedy. I would be really glad to get this sort of gains in 11 months. Let's now look at the risk part. So what is the risk here? Because even if the option gets exercised, you would make 32%. If it doesn't get exercised, you are making 22%. So where does the downside come from? The downside is that my upside is capped. It means that, let's say if this stoneco stock jumps to $20 within the next 11 months, I would have doubled my money had I not sold this call, right? Because I sold this call, I would miss out on those gains. If the stock goes above $12, every dollar it goes up, I would miss out on $100 each. For example, if the stock price get to $13, I would miss out on a $100 gain. If it goes to $15, I would miss out on a $300 gain because $12 is my break-even price. So if I'm not too greedy and if I'm happy with 22 to 32% gain, I would go with selling calls on stoneco. On the other hand, if the stock price falls to about $5 or $6, right? In that case, it's still good for me because the stock option will never get exercised and my actual price paid per share would be about $7. So instead of buying the stock at $9.13, by doing a selling call, I reduced my average price to 7.08. So these are my thoughts about selling calls, and I would not buy stocks just to do selling calls, right? So I would do this on the stocks that I really like to own, and I would not feel bad if it drops significantly. So these are my thoughts. Let me know your thoughts about calls in the comments. Thank you for watching.